please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The rupee is in top focus this evening. The currency has weakened 8.1% so far this year, making it the worst performing currency in Asia. Today, the rupee fell to an intraday lifetime low of 69.09 versus the dollar, owing to a variety of factors, including a strengthening dollar, a high crude price, as well as the rupee has also been hit, in fact, it's hit its previous all-time intraday low of 68.63 on 24th November 2016. Latha Venkatesh joining us now to help put the day's currency movement in perspective. Latha, clearly a slew of factors impacting the rupee. What do we make of today's levels?
Well, in the first place, we are very sensitive to crude. So crude rising 3% today, and in fact, maybe almost 6% this week, was clearly a rupee negative. Increases the current account deficit and hence the pressure on the currency. But it's not alone. There has been a synchronized fall in emerging markets, equities and currencies. The yuan has been depreciating, and even to compete, the Indian rupee's slide is good. And I wanted to emphasize that this is a good slide. It's not something that's spreading mayhem and panic. It's happening gently, and it's happening competing with other emerging markets with whom we compete on trade terms. Now, one reason why the EM currencies are falling, especially the yuan, could also be that their own central banks are allowing it to fall. Aside from the trade tariff tangles that are putting pressure on the Chinese economy, after all, the Shanghai index also is down, in bear market terrain, down 20% this year. The emerging market central banks would like their currencies to fall to make up for the higher tariffs that the countries are facing. It neutralizes the higher tariffs to some extent. So this could also be a fall which is welcomed by the central banks, and therefore they're not fighting it. Again, for India itself, it's not just the crude fall. It's also that foreign funds have been deserting Indian markets for some time now, and now you feel the pinch because you're also paying a higher import bill for crude. Sentiment also is against the rupee. But 69 is not a long way from that 68.80 that was yesterday and the 68.60 the day before. So it's been a gentle fall. Importantly, we should note that while rupee may be the worst performing 8% fall in 2018, it compares to like 7.5% for the Indonesian rupiah or around 7% for the Filipino peso. So we are not singled out. And if you compare us to the ruble, the real, the Turkish lira, some of them have fallen between 15 and 20% in 2018 itself. That's the 2018 comparison. If you take the 5-year comparison from the taper tantrum onwards, the rupee has been flat. If you compare it to August of 2013, we are flat. Whereas most other currencies, the ruble, for instance, has depreciated by 100%. The Brazilian real, the Turkish lira, all of them 160, 180%. So actually the rupee is a picture of stability, and this weakness is something that perhaps is merited by the macros of the country.